TradeMonster.com, 4.5 stars, best online broker, 2 years running according to Barron's. TradeMonster.com.
Welcome back to the Florida CME Group here in Chicago, May 9th. Last week, Coffee Grinds and Dr. J were out at the Milken Institute. It was a great event. They really had some great insight provided to the market. But here we are back May 9th. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal, and we assist firms in overnight cash management. Have any cash management needs, give me a call. Either get me at The Killer or comment here on this video. But let's look at this market last week. We had some sensational, wicked moves. The Treasury, we continue to see the graph for Treasuries. There's been about a 50 to 60 basis point move in the 10-year. We're down about to test this 3% level in the 10-year, floating currently around this 315. Treasuries are coming off their highs a little bit this morning, but this still feels bid. And I've talked to a lot of people about this. There's a little bit of buzz around here in these pits. And is it the June 30th QE2? Is that coming, to a final stop? We don't think so. This is kind of a precursor. This move in yields, maybe this is a little bit softer landing for Uncle Ben and his boys, or maybe they hover a little bit. So there probably won't be a QE3, but there's going to be some deviation. It's going to be QE2.5 or some type of language, something that's going to give a little bit of a vision that rates are going to be a little bit cheaper for a little bit longer. And we saw that also come out of the ECB, and that's really thrown a couple curveballs into the euro currency. Last week Trichet, they did not raise rates as expected, but they're also a little bit concerned because there's a continued disparity between the two markets. We've talked about this before. Our policy here, we're stuck on zero. Over there, they raised rates last time. So they're trying to curb inflation. We know we have inflation outside of all of our CPI and PPI numbers. So how's this all going to work out? Well, ECB kind of put on the brakes. And on top of that, we had the Greece situation kind of bubble up a little bit on Friday. Greece is in a world of hurt. And we're seeing that, and I think there's other companies. So we've seen the euro currency come off about $4, from about 148 down to 143 right now. But I think the US dollar index, that has been the leader of these markets. Our policy here is really beating up the US dollar index. But we kind of came out last week with a nice rally, and that kind of seemed to unravel all of the markets. We saw gold come off as soon as the dollar got strong. We saw silver. What a move in silver. But the biggest move was oil, crude oil. Holy cow. We had a 15% move. The biggest move in crude oil since 2008. And you just saw those HFTs come into the market, and they sold it down $6. They sold it down $7. But I really think one thing that no one's talking about is the ETFs. Look at these ETFs, and what are they doing to these markets? They are exaggerating each and every move, no matter what the market is. But an ETF obviously is correlated to the future, but it's a daily snapshot, so it's a different kind of animal. So when you see last week there was a big hit to one of the biggest commodity hedge funds, they lost $400 million. But you're seeing those positions get flushed out due to the fact people are playing the daily ETFs. So we have all these components coming in, making these markets volatile. So from a trading perspective, volatility presents opportunities. So I hope you're being nimble, but be disciplined, because these markets are unforgiving. And I think we're going to see continued movement in the US dollar and the euro currency, because obviously inflation, all these different concerns come here. And if you look at, there was a great story about Unilever, over in China, they kind of forewarned that, hey, inflation's here and we're going to have to raise prices a little bit. Well, guess what? China, the government, did not care for that statement and actually penalized them with a financial penalty for saying that, promoting, because typically if you say there's inflation, it's a self-fulfilling prophecy. So, be careful this week. We got a little moving parts. US dollar index is the leader. Crude oil right now is up $3-4. That's a wild market. And one thing also remember this week, be the hammer, not the nail.
Know that I can take it to the next level, baby. If you want this goodness, sicker than the remix, baby, let me blow you.